All right, guys, good morning. Today, this is Trader Sebran here, and we are in a new week to do analysis regarding GDP USD, Euro USD, and also SP500. So I hope everyone will be able to have fun and understand what the market is going to do in our coming week. So this is British pounds at the moment. So remember, we are traders, and as traders, day traders, we look out for opportunities on a daily basis and how we can take advantage of those trades on a daily basis or weekly basis. And you are not expected to trade every day. And that's one of the things that trader need to understand. You are not expected to trade every day, but you are expected to have at least 1 to 2, 3 trades in a week. In a reasonable, sensible week, you should be able to make 100 pips or 200 pips or 150 pips, a minimum of 100 pips in a week, and that is useful. That is great. That is moderate and acceptable as a trader. So don't um, wake up every morning and think, okay, I must trade every day. No, just because you're called a day trader doesn't give you that opportunity in the market to trade every day. And that is what I want us to understand as traders. So it's so important to know that every week you have opportunity to catch. Even one trade is enough, or 2 trades a week can actually make your day, make your week a beautiful week. So very important. And we are in week 29 now. I'm going to be doing the week 29 analysis. As you can see on GU, 4 hour time frame, the market is bullish, very bullish. And we see this was the last week move. All of this was last week move, which we predicted may happen, even though we drew a borderline that if price broke below this low, we should be looking for a retracement to the downside, or if price retreats, we should be looking for a possible move. But what happened in the market last week was very, very interesting, because if you notice that price eventually did not do a proper retracement before rallying up. He eventually rally up and start pushing higher. We were anticipating that price will come to a bare minimum of 38 Fibonacci retracement before rallying up, but it didn't. So having done that, let's go to the daily to properly look at what happened. So we have this area that the market was, and then we saw price creating, obviously creating this high. So this was what we saw last Friday. Now, on Monday, the market did this move by consolidation. Monday, Tuesday, it consolidated. But on Wednesday, the market went higher by breaking this high. Remember, I told you that we were looking at what the market would do at this level. If there's a break above, then we're going to look for buys. And that's what we did last week. When the market broke above this high, we started looking for more buys, because we knew obviously it's a bullish market, but we needed to see that area, which is 128 psychological level area, which was a major psychological level area that price reacted to multiple times. As you can see, market needed to break that high and then maintain it. So what we should be anticipating now is 2 things: either the market decide to come back or even push higher. So already we can tell that the next high that the market would target on the daily time frame is 130, towards 131, 132 area of psychological level. So we're looking at this high around that level. So that is area that the market may eventually get to before any possible retracement. Now, it could retrace a little bit, but we are bullish. So what I'll tell you is look for opportunity to buy. Every pullback is not your trade. You want to buy every market. You want to buy every opportunity that the market gives you, because at the moment GU is extremely bullish, and we need to look at that as it is. Okay, so let me give you a guide here of what to expect and how to trade this. Now we can see that the price is giving us a rally of bullish momentum, and that high was broken. We have this rally again, massive push up on that 4 hour time frame, and then we have this beautiful rally here. Okay, now we just saw that the market closed in a bearish candle decision, so we should be anticipate a minor pullback. So this is 4 hour time frame. This is the range I'm looking at, that there should be a minor pullback. So for me, I'll be looking for opportunity that price will pull back into this area. So a minor pullback that will let me show you, that will give us an opportunity to take a little trade there. So we're looking at a minor pullback to 38. Worst case scenario, now price pull back into 38 or touch this last support area, all right, which was last resistance, is now support area, and then rally up again. So that's what I'm looking at. So the question is, at what point would price get to? Where would price go at this level? Well, if price pull back, now look at that. Did you see this is a very strong psychological area of 30 1.30 31.30000. Okay, that's psychological level. So we should expect a pullback into that that lower area, this area here, for a kind of retracement into 38, or worst case scenario it dropped to this level, and then we'll look for another opportunity to take the price higher. Now if you check previously, the pullbacks are not really major. So the there might be news. Let's look for the matters. Hold on. Yeah, we have news coming in this week, Monday, Tuesday. We have red folder news, so that might just contribute. CPI is coming in. No, not yeah. That's card. Okay, that might affect USD as well. Retail sales is coming in, and that will be on Tuesday, and on Monday we expect news. So for that reason, on Tuesday and on Monday, we should expect price to drop. Maybe drop a little or push higher even. But here's what you would anticipate. We anticipate that price will drop a little bit lower into the psychological level, and then we'll be able to take that trade and also push higher. So ensure that you're watching. Okay, look at this area on the 30 minutes, 1 hour. Let me just show you 1 hour time frame. See, look at this area on the 1 hour time frame. We want price to break out of there. Now if it breaks lower, okay, then we are expecting that retracement to happen. Now there will be a touch here, and that will give us opportunity for rejection, and price will may continue to the upside. So that's where you want to buy. You want to look for opportunity to buy at this level. But if it goes lower to minus to 68 62 Fibonacci retracement, that is well retraced, then be ready to take that price up. So watch how price do. So if you know you are doing you're going to trade what do you call it, trade against the trend, like you want to trade the retracement, be very careful to trade it. Be very careful to trade it. So ensure that you're risking what you can afford to lose, because you're trading against the trend, and price may not move the way you expect, and whenever you're trading against the trend. So personally, I'll be waiting for this move, for price to tap into this area. Remember this area, this range, the 4 hour range. So I'm expecting price to tap into this area and reject, or even break a little bit lower to tap into 61 and reject, and I'm going to looking for buy at this area. This is personally what I'm going to be looking at, and I'm going to be targeting the next psychological level. If I look at the 30 minutes time frame, yeah, I'm going to be targeting this area for the week. That would be 130 1.3100. That means the psychological level there, this area. So that will be my area for the week that I anticipate that price will rise to, if they eventually decide to push higher. But you will know if you go to the weekly how the market is ace like. As you can see, the weekly is extremely bullish. There's no telling that the market is going to go higher. because the weekly is extremely bullish, as you can see, is eventually breaking out, except a reject here. But we know that the next high is our possible target on the weekly. Let me show you what I mean. The next high is our possible target on the weekly, which is this high. So we know that the weekly, this is the next high. There we'll be anticipating a kind of retracement. So having our TP on 1.31 psychological level is not a bad idea. It's possible that the market will get there. So for the week, target that area, and also we're looking at this high at this level, which is 135, 131, or 132. Price may get there, but we're looking at 1.31500 as the 15-minute after the weekly time frame told us. Over here, as you can see, this area where price rejected at this area right here. So we're looking at that area, but price may come up there and reject again the second time. But if it breaks above that level, then we'll be targeting even more higher levels at that. So at the moment, this is what we see, that we are bullish. GU wants to rise. So let's see how far it goes. So that's for GU. So let's look at Euro USD. Now on Euro USD, the weekly right now, we see that price is beginning to break structure to the upside. As we can see, this is the weekly time frame. And if you check, we are actually ascending. So price is creating higher lows to the bottom, and now beginning to create a new higher high. So that means that we are now ascending to the upside with the Euro USD. So Euro USD is beginning to rise. So we are bullish right now on Euro USD. We should be anticipating that price will begin to break structures to the upside. Various highs will be taken out, and that's what we're anticipating that the market might do this coming week. We're expecting price to begin to break those structures to the upside. As you can see, if we put a trend line there, we can see that price is obviously breaking that trend line. If you put it on the body, it's still the same, but I don't know. Yeah, that's better. So you still see that trend line going. If you put it on the week, it's still the same, but you have to ensure that it line up with the week, and obviously, which is obviously not. So I'll just put it right there, which is fine. You see that that trend line is already broken, and price is obviously targeting the next high, which is the next psychological level of 1.100000. So that's where price is going right now on that part. So if that is true, then the next thing we want to look at is on the daily. Let's look at the market, how it looks like on the daily. So we can see the daily is also bullish right now. So we see structures is being broken, and anticipated that price will get even higher. So now we know our direction bias for the market. The question is, how do we not trade it? Well, on the 4-hour time frame is where you begin to look for structures. Like I already told you, we can see that the market is doing a wonderful swing higher highs right here, creating that bullish momentum already. As you can see, the price is pushing up crazy. All right, so we just saw that price break the high. Now price may push even higher to the next psychological level. If I go to the great, so if I go to the 30 minutes time frame, you notice that price just eventually broke above a psychological level here. So the next move we're going to be upward. So what you want to see, for those of you that day trade, is to observe this area of interest. Let me just draw it. This area of interest. So we want price to break out of there. So you might find that price push higher and then retrace and then continue to the upside. So this is what I'm anticipating that it may happen. Price broke above this, take out liquidity, and then come back and then rise again. So you should be anticipating that. So in other words, this is from here to here is another 100 pips. So I'm expecting price to move higher to this level this coming week, as long as it's going to be bullish. So anticipate a more buys on Euro USD. So this is the reason why I look at the market, because we can see that the market is bullish. So you trading, trying to sell this market is actually not something you want to do this week. Don't try to sell GU. Don't try to sell Euro USD. Now, let me show you why. If you turn to these fundamental tools that I use for fundamental analysis, you'll notice that Euro USD is very bullish right here. Can you see that? Very bullish. So don't even try to sell it. And this is recently updated. Okay, as I'm speaking to you, it's recently updated. What about GDP USD? GDP USD is bullish, but not very bullish as Euro USD is. But we tell that both of them are bullish. So if Euro USD is bullish, British pounds will also rise, because most of the time they trade in correlation. So you should know that they trade almost together. So that's the reason why you should be buying this market, both of them, this week. I hope that is clear. Now let's take one more, which is SP500. SP500. Now SP500, if we go to the weekly, we'll notice that we are still bullish. The market is always a bullish market. Okay, so we're bullish on SP500. Let me remove the drawings. We're bullish on SP500. So if you want to trade this pair this week, look for more buys. That's what it's like. Now, the next candle on the monthly is extremely bullish. We can see previous monthly candle was bullish. All you needed to do is to see when the price break above the previous month and then look for more buys at that level. Remember that. So the previous month is bullish, and we can tell that on the daily that the market is struggling to break a certain structure. So this is what you now do. You put your line, a support, a resistant line at that level. You want price to break. If price will not break that level, you are not trading. So do not sell this market. You may try to sell as a short sell, but you wait for price to break out of this area of consolidation where you have this structure. All right, support and resistance area. You want price to break out of there. Now price is trading at the middle. So if you go to the 4-hour time frame, you observe that this is a retracement going on, breakout structure retracement. So how do I trade it on the 4-hour? You look for buys, because it's a buy market. So what you do, put your feet there and measure this area of retracement that is going on, and watch out for price reaction at this level. So you want to begin to look for opportunity to buy at this level of price, maybe at this price level where price will jump down, and then target the next move if that's what you want to trade, whatever you want to do. But do not try to sell the market. Okay, don't try to sell it. Always look for opportunity to buy. Every time SP500 is always a bullish market, as long as I know. So it has been bullish for a while. So wait for a pullback into this area. Wait for price reaction, rejection, or something of some kind. And banks start see that, and there's a bullish retracement up. You just have to buy and let it ride. I think that's it on this pairs today. I hope you guys enjoyed the section. It's a bullish market all the way. So we're buying Euro USD, we're buying GDP USD, we're buying SP500 this week. So this is my take on all the pairs that I've shared with you. And I hope you enjoy your week 29 as you trade. Now, listen, you can also join us on our community group. We have trading course for you to take. We have analysis for you to take if you're interested, 101 mentorship for you to take if you're interested. We also have a free course for you to take if you're interested, and if also you're interested on algorithm trading, so you can contact us. Listen, this is Trader Sabran for you, trying to support the community with what we know with trading. Thank you so much for joining us, and follow the links in our description below. Hit the subscribe button and the bell notification so that you'll be able to get updates from us every week. Thank you so much, and I'll see you in week 30. Until then, happy trading, guys. Bye.